So let's start with Procter and Gamble. So Procter and Gamble is a safe stock. It's going to be a steady Eddie. To do 16% from a Procter and Gamble and receive a 2.3% dividend, that is a solid stock. It's a very good company, very well run. It's up 44% over 5 years. You compound that, dividend, you're probably up where 55, 60% return, which is a very good return, considering that it's a very safe stock. It's not an Nvidia like, or it's not a Microsoft like stock. It's the stuff we consume at home. It's paper goods, it's soaps, it's dishwashing detergent. It's the stuff we consume. So in good economy or bad economy, Procter and Gamble is going to do okay. And that's why it's held by so many investors. They like that stability. They want a stable stock. The company, I think, is fairly priced. Analysts believe that it's discounted just slightly. And this stock, I think, is one of those that it's not a bad time to look at safe stocks, because I don't think anybody's running to safety just yet. I could bet you $1 that if we had, fear of a recession, Procter and Gamble would be rallying, because investors would be all over it trying to buy it up. But at this point, I think the economy is going to be okay in 2025, and who knows about 2026. So Procter and Gamble is down a bit. The market, if you look at Procter and Gamble, right, it's a very stable stock, but you don't see, big growth in revenue. It's a negative 1% net sales. And they think that, they want to tell us that organically they grew 2%, meaning they probably sold units and so forth that were 2% higher. But the exchange rate caused that negative 1%. Well, it comes with the territory, man. You've got to absorb, currency translations. It's still a negative 1. So it's a very stable stock. It's very stable. It's not going to go up much. It's not going to go down much. And it's going to be very consistent in the earnings per share it produces. So the news didn't excite investors. They're looking at it and not overly excited with the company. I don't think there's anything wrong with Procter and Gamble. It's just is what it is. It's a stable, safe stock. So we look at top line revenue. These are green numbers, but you can see it's slow growth. It's just going up slightly. It's a big, big company, $84 billion in the trailing 12 months of revenue. Really consistent, well-run company. It's a real stable stock. This is not the right stock for me. If I'm going to go into a stock like this, I'd probably just, kind of either buy an ETF or I would probably buy bonds and have a good rate of return and really good stability. I'd rather take my chances with higher growing stocks. They're going to have a great return. And that's where I get my great returns. And then I keep my stability with bonds and maybe a few ETFs here or there. So Procter & Gamble down 2%. It's let's see what analysts have to say about the stock. There's 19 analysts that cover the stock, and the high is 190, which isn't too far off the current stock price. On average, they're saying, hey, it's really worth 176, which is about 4% higher than its current stock price. And then the low is 159. So you can see this is a safe stock. There isn't a bunch of variability in what analysts have to say about Procter and Gamble. Looking at their earnings per share projections that are expected, and there's a number of analysts that are putting this data together. So really well-covered company. It's going to grow nicely. So this is going to give, again, this should be a reliable stock. Shouldn't veer too much from where it's expected to go. It's going to eventually be about a $95 billion revenue company. So Procter & Gamble was the biggest market cap of the day. It was interesting. And we will move forward. Everybody, welcome. Want to invite you to become a community member. Sign up, become a part of the community, and get more involved. We're going to have the first workshop tomorrow. And it's going to be a workshop to go over a few, I think, good areas of knowledge, and maybe help investors maybe look at financials a little better, maybe just kind of share examples of financials and go through them. To get to know a company is to get to know their financials. So I think that's always a good place to start. And each week we're going to be having just workshops, and it's going to be driven by member request. Like, what do you want to go over this week? It will be the topics. Then on Sundays, we do an investor call, which is good, healthy exchange of knowledge, ideas, what's going on, what's working, what's not working, type of conversation. If you want to be involved with that, become an advanced investor and you will be a part of it. So look for more details in the description of the live stream.